Hello and good day. This is the daily analysis of the Bitcoin symbol on February 14th. As predicted, after closing below the important level of 67,300, the price continued its downward trend. It continued on its own, and finally, it reacted to the $65,000 level and was accompanied by a bullish momentum. It is predicted that the price will have a short-term downward slide. It will enter the fair value gap area, and after that, it is expected to be rejected from this zone towards liquidity. Then move towards the buy side, which ultimately could push it up to the 70,000 to 72,000 range. Ultimately, if there is no liquidity in the market, it could be rejected from this area and move downward. It would continue its downward trend towards the sell side liquidity and the important liquidity levels. With the analysis of the 1-hour time frame for the Bitcoin chart, we can see that the price movement has entered a consolidation phase and is currently forming. There is liquidity on the sell side and liquidity on the buy side. If liquidity in the market increases and the price manages to reach the liquidity on the buy side and absorb it, we can use this opportunity to enter a sell position. We set the stop loss behind the swing, and finally, we can specify the target level at the drawn liquidity level at 65,118. Or, we can enter the position with a 1-to-1 or 1-to-2 risk-reward ratio, where the target could be the liquidity price on the sell side in the market, or if the price moves downward. It enters the unicorn zone at a certain level, and if a reversal is identified in the trend. In a downtrend, we can use this opportunity to enter a buy position. We set the stop loss behind the unicorn zone, targeting the buy side liquidity levels, side. Also, we can identify the factors behind the price drop by analyzing fundamental analyses. We can see that since August 2025, the US stock market has grown by 10%, but Bitcoin has dropped by 25%. This is a strange and scary divergence, and it has led to a price decrease. We can consider the main reason for the drop to be the temporary liquidity pressure and the restrictive monetary policy of the Federal Reserve, although it should be noted that this is not absolute. There is a bearish and negative outlook in the market. The current conditions in terms of interest rates and liquidity are similar to those in 2019. This is considered an intermediate correction. Also, by examining bank reserves, which have reached about 9.5% of GDP, we see signs of liquidity stress and the possibility of money injection by the Federal Reserve. According to on-chain data and reports from Cointelegraph and CryptoQuant, Bitcoin has entered a capitulation phase, and the average realized loss so far is about $0.2 billion. It is considered one of the most severe capitulations in history, and capitulation usually happens near the bottom. It happens not at the start of major drops, but rather can. This perspective suggests that this drop is more of a cyclical correction, and in the absence of a major downturn, it could be the prelude to the next bullish wave, which, by examining the ETFs, music ETF, in the last 3 days of the week, Wednesday, Thursday, and Friday, we see that on Wednesday and Thursday, respectively, we had negative net inflows and outflows from the ETF funds. A total of $226 million was withdrawn, and after that, another $140 million was taken out. But on the last trading day, which was Friday, there was only about $15 million in net inflow. Compared to previous days, the net negative flow was still greater than the positive inflow, which has caused fear and a decrease in liquidity in the market. By examining the fear and greed index, we see that it has entered the range of 11 and the level of fear and greed is increasing. If the index manages to enter the fear zone and then move into the neutral zone, it could signal the end of the downward trend and the beginning of an upward trend in the market. However, we are still in the extreme fear zone, and traders can consider this as a period of heightened fear. They should take this into account and, by reviewing the order books, avoid the entry of smart money into the market. The first significant resistance level we see is at the weekly level of $70,880 and ultimately at $72,000. This is a highly significant liquidity area and could push the price downward, which could result in liquidation. Liquidity could be drawn toward these upper zones, and after collecting liquidity, the price may move downward. Ultimately, there are two highly significant levels, $65,000 and finally $63,000. At these levels, the price could once again move upward. There is $22 million in liquidity at the $65,000 level, and after this liquidity is collected, the price could move downward, entering the $65,000 level and then being rejected from this zone. Also, by analyzing the liquidation levels on the Binance exchange, let's analyze this chart in such a way to see where most of the leverage positions on Bitcoin are concentrated. These are areas where, if the price reaches them, long positions or short liquidation levels will be liquidated in a chain reaction. These levels are not support or resistance for us, and we can only consider them as liquidity targets. We should keep in mind that price usually tends to collect these areas or perform a liquidity sweep. And after that, from this chart, we can, use it to confirm our bullish or bearish scenarios for an uptrend or downtrend, so that when these levels also align with the market structure, the probability of price movement increases. Currently, we can see buy-side liquidity located at the $70,000 level, ranging from $69,500 to $70,000. And finally, on the sell side, we can also consider the range from $68,900 to $68,000 as high importance liquidity zones where the price could move downward. It could enter the first fair value gap zone to collect liquidity, then move upward again so that buy-side liquidity can be gathered, and then after that, continue its downward trend to collect sell-side liquidity. This is the analysis of Bitcoin on the 15-minute time frame. We can see that the price movement over the past two sessions has been within the New York morning session range, and there hasn't been enough momentum or the necessary liquidity to break out of this range, so it's expected that the price will make a bullish move during the London session. Liquidity needs to be collected on the buy side, and if liquidity is gathered and the price closes again within the range or the order block area, it can be considered as two strategies: the Ryan Soldier strategy or the false breakout strategy. We can consider using this opportunity to enter a sell position towards the sell side liquidity target in the market. But if the price moves downward and collects the sell side liquidity from the consolidation area and enters the unicorn zone, we can use this opportunity to enter a buy position towards the buy side liquidity target and the liquidities after the order block. Wishing you success and prosperity.